What's going on, everybody, and welcome back to another video on the Fear of Being Average trading channel. I just want to say Happy New Year's to everyone. 2022, we're going to stay productive. I'm going to continuously be giving you guys new content every single week. I'm going to have my live streams every single day. In 2022, we're just going to stay productive and we're going to make the best of it. We're going to stay consistent, stay disciplined, and I want you all to do the very same thing. But let's get on to the video. We about to get right on into this weekly market breakdown, the first one of 2022. We're gonna get right on into it, and same pair as always. We're trading in at US30. That's the only pair I'm gonna be trading all year. I'm gonna look at other pairs, obviously, like I always look at my other pairs. So if you are active on the live streams on the mornings, and you would know I usually look at NAS 100, you look at US30, I look at Forex pairs if anything, if anyone has anything they want me to look at. But that's really it. So let's get on into this US30 breakdown and let's do it. So first thing I'm gonna do, is I always do, is I'm gonna mark up the previous Friday's Asian range. That's something I always do. I don't care what day of the week it is, I'm always gonna mark up the previous day's Asian range. And in this case scenario, since it is the weekend, the previous Asian range is going to be from Friday. So if you guys watch my weekly market breakdown videos, you would understand that I always mark up the Asian range from Friday when it's Sunday. So then when Sunday comes around and the market opens, we can use that as an area that we can basically anticipate price to ideally have a retracement to, or just an area where price could likely target liquidity. So next thing I'm gonna do, I'm gonna put the 50% of that area and I'm going to mark out where that is. And as you can see from this general area, which is around, I say 36,400 area, this 36,400, there's a lot of volume here. And another way you could look at that is by simply using the fixed range, which is a volume profile. And you can use it like a fib. So you're going to pull it from a low. So in this case, the highs and low of this range I'm going to do. So I'm going to do from this low down here, pull all the way to this high. And just like this, around this 36,400 area is where the majority of the volume is. So this is going to be an area where more than likely price is going to have its expansion from or away from. So from here, we can then anticipate price to either have a retracement here to continue higher or have a retracement here to continue lower. Now that we have that marked up, we're going to look at possible areas where price could likely have a retracement to based off a higher time frame. So now I'm going to go off to the daily time frame and I'm going to see what's happening on the daily basis. So first thing I notice is after price created these all-time highs, it cleared this liquidity after creating these all-time highs, just like this. You can see had a swift movement to the downside after clearing these highs. So what is that telling me? That's showing me that price has a willingness to want to see lower prices. Why? Because we cleared the buy side liquidity. Now where are we going to target next? We're going to target sell side liquidity. So simply what I would personally do is I'm going to pull my fib from this low of the move that started this whole move on the daily time frame, and I'm going to pull it to this high. I'm going to use my normal fib levels. So if you don't know where I'm drawing it from, I drew it from this low to this high. Why? Because this is the beginning of the move and this is the high of the move before price started to retrace. So now what do we see? The 38.20% and the 70.50% are both in ideal areas in which we would likely want to see a possible retracement to. Maybe this week, maybe next week, but at some time I would just want to see a retracement to these areas. Why? Because these are areas that have institutional order flow, and why price should have a reaction here. Why? Because if you look at the last down candle before this up move, this major up move, it's in confluence with this area, which is around 35,500, which is another confirmation that I'm actually going to put here. So this area is 35,500, just like this. Now we have 3 confirmations. One, we're at a 35,500 level, which is a big figure level that I like to pay attention to because there's more than likely always going to be a form of a reaction here. Even if it's not a major reaction, we can then anticipate price to either target this area just because it's a big figure level or have a reaction from it just because it's a big figure level. Now we look at the confluence with it. We also have this daily order block right here, the high of this order block. Right, where's it at? Daily order block right here. We have the high and the low, and that's also at the 70.50% on that fib we drew from this low to the high. So there's multiple reasons for me to believe why price will have a reaction in this specific area. So this is going to be somewhere I pay attention to coming into this week, next week. It might not happen next week or this week, but we'll see. These are all going to be areas that we're just paying attention to. That's all that matters. We're looking for areas that have reason to have reactions. If we can anticipate specific areas to have reactions, when they happen, we'll know whether we want to see price go higher or lower from those areas. Another thing I see is right here at the 38.20%, we have this last up candle before this down move that was a previous bearish order block that got broken through, creating a breaker block. So what do we know about the 38.20% level? That there is a high likelihood that when paired with a breaker block, we could likely see a form of reaction also to the top side. So I'm going to mark up the 50% of this breaker block. What's going on, guys? So before you keep on watching the video, I just wanted to tell you guys about this opportunity that I have for you guys. So as of recently, I have been getting a lot of questions and comments and concerns about whether or not I do one-on-one mentorship. I personally do not do one-on-one mentorship, but I do have mentorship now, which I decided because you guys have been asking for it for a while now. So what will I be providing? I will be providing daily live stream access and mentorship every single day, where I will teach you everything that I know and I will guide you from zero to hero. And along with that, I will be giving you live trade analysis, and you will know all of my trades taken live real time. So with that being said, the price of it right now is $100 a month, but the price is not going to be like that for long. After the first 100 people join, I will be having the price go up. So make sure you take advantage while you can. And now you can finish watching the video. Just like this. And now we look at where this is in price wise. We're around this 36,000 levels, which is another confirmation for why we should possibly expect price to have a specific reaction in these areas. So just like that, we have 35,500 level, which is more than likely going to have a move from there or away from there. And then we have this 36,000 level, which is also going to be likely to have a possible move. So now we have two areas in which we are anticipating possible reactions from, just because we're going off of high probability areas that have higher time frame reasoning. So now when we go back to the lower time frame, now that we know we're more than likely going to have a bearish week coming into the beginning of the year after clearing the buy side liquidity, now we're going to target sell side liquidity. So price is either going to target all the way these lows down here and target the sell side liquidity, or we're just going to continue to have this possible retracement to continue higher, or we can see price continue even lower to then go higher from there. So what are we going to do? Now we go down to those lower time frames, and now that we know we're overall bearish on those higher time frames, here, let me get rid of all these because it's the same chart, so it's going to carry over. Just get rid of these because we have the higher time frame chart over here. Now we know we're more than likely going to be bearish, so all we would simply want to do is look for possible moves to catch these areas down here. So we can use these as targets, and we can use these as areas that we would likely want to enter later on into the week possibly. So now that we know where we want to see price go, we know we cleared the buy side liquidity. Now from this high up here, we see this is where we cleared on the higher time frame. This is buy side that we cleared the buy side liquidity. I'm going to pull my fib from that high to the very low down here. I'm going to show you in a second. So right here, where did I draw my fib? I drew from this high to this low because that's currently the range price is in as of right now. And what do I see? I see after price traded into the 62% area, we already immediately started to drop to the downside. So let me get rid of this 38.20% rejection. So this is going to be the area that we're paying attention to. So now we're more than likely going to target, in my opinion, I would want to see the price target all these lows, all these lows, all these lows to continue going lower in anticipation based off of that higher time frame analysis. So the higher time frame is basically showing us what we would likely want to see on the lower time frames. So now what I would do for this, I would simply not be able to get into a trade until my specific time. I wait for specific times of the day. So something you could possibly anticipate is, since you're already bearish, you could simply wait for a possible reaction for price to have a retracement to this last up candle before the down move that was right here. So this will be classified as a 15-minute bearish order block. So I'm just going to make it red so you guys can see it. So simply something I would possibly anticipate when price opens is for price to go higher, have this retracement to then continue lower, and based off the higher time frame from there, we want to see price continue lower into the week. Now that doesn't mean this is going to happen. We could easily see price when it opens to continue just going even higher, possibly tapping into this area up here after clearing this liquidity to then fall. But these are just ideas, because at the end of the day, we don't know exactly what's going to happen. We're basically taking in high probability guesses on what we can anticipate for price to do. Simple as that. Now based off the higher time frame, this is the daily. Now if we come over here, I'm going to look at what's happening on the weekly time frame, because the weekly gives us a good idea on what to expect for the week. So as you can see, price pushed, retraced, pushed, retraced. We're pushing, and now we're starting to after we cleared these highs, like I showed you on the higher time frame, cleared those highs. Now price is showing a willingness to want to come lower. And where did price tap into up here? It almost tapped in that 36,800 level, which is another big figure level. So we can anticipate either price is going to push, tap into one more time before potentially falling lower, or we're going to simply just wait and see price start to have a form of a retracement before going higher. Now this is based off the weekly. Now if we come down to this lower time frame, like on the daily, when we have that retracement, where would price fall to? If we look at where this is right here, this high, this candle right here, this last down candle, we look at it like this, where is this at in price? This is at 36,000. Now we go back to our daily. 36,000 is right here. So now we have more than one reason to believe why price should likely come to this area, have a retracement to then keep going higher. Now we have weekly analysis, we have our daily analysis, and now our short-term analysis. We're looking for those entries and then catch the expansion to the downside or the top side, just based off having that higher time frame directional bias. So that's really what it comes down to. You use the higher time frame to basically figure out where the trend is more than likely going to go. Use the higher time frame to figure out whether you're likely to be bullish this week, likely to be bearish, likely to consolidate. The higher time frame is going to give you a good bias on what you should expect, because the lower time frame is going to be good when you're day trading and you're looking for specific entry signals or exit signals, but the higher time frame, that's going to tell you the overall direction. So as of right now, I am bearish on US30 based off the daily and the weekly, but until we get a bullish day and possibly just see price form another bullish candle, I'm going to be bearish until we at least get to 36,000. From here, I can then possibly anticipate possible moves to the top side, but only time will tell. We are neither here nor here, so we just gotta let price play out, let the market open, and we're gonna see what this first week of January is going to do for us. So that's really it. So this is my analysis on US30. Hopefully I was able to give you guys a little bit of an insight on how I personally view the market. If I was able to teach you anything, if I was able to just give you knowledge that you didn't previously had, make sure you like, comment, subscribe, because I'm going to be active every single week. I'm going to continue to give new videos this 2022. I took a break from uploading educational videos, like specific video topics, and I just stopped for a little bit, but now I'm going to go full force 2022. Gonna continue to give you guys free value, free content every single week. And we're just gonna look to have a good year. I'm looking to change lives. I'm looking to change my own life. And that's really what it comes down to. So if this video was helpful to you at all, make sure you like, comment, subscribe, and I will see you guys in the next video.